Welcome back to your money and your life. This year has been wild when it comes to share investing. Markets have been on a roller coaster ever since US President Donald Trump has come to office, as some of his policies have spooked financial markets on different days. Those massive gyrations cause a lot of angst among share investors. So how can you ease the tension, limit losses, or indeed make money in falling markets? Let's get in the mind of one of Australia's best fund managers, Jun Bei Liu, founder of 10Cap, and see what she does. Jun Bei, good to see you.
Good to see you.
Do you get spooked with all these gyrations like the rest of us?
Oh my goodness, I get so excited. I get so excited. It's the opportunity, you know. So we do two ways, because first of all, we can short companies. So I actually make money where share prices fall. So that's one big benefit. And at the same time, when the market volatility normally picks up, you know, wild ride, it provides a buying opportunity. You know, suddenly the good quality company we want to buy go on sale, 20-30% off. This is when you go and buy them. So, you know, we love this kind of environment because we find it's a great hunting ground.
Are there any stocks in wild markets that are more stable than others and can almost sort of be the foundation of your portfolio?
Absolutely. I think these are called the defensive quality names. Now, there's a few names you can name, but you know, a lot of times when market fall, you tend to see every stock falls. However, for the company that sort of hasn't really gone up as much, made that much money for the investors, they tend to fall a little bit less. First one is the Lottery Corp, TLC. That's a really interesting one. The company sell lotteries.
So they're your Powerball,
that's your Powerball
company.
That's right. And then the earnings so defensive year in, year out. You get that high single-digit growth, and it's very, very cheap. The reason it's cheap is because recently they had a pretty bad run. So the Powerball hasn't worked very well in their favor. So when luck happens that way, that means it will turn in the next 12 months.
Got a second one?
Second one is interesting. It's Cochlear. Yeah, so
Bionic ear.
That's right. And Cochlear, actually, share price hasn't really gone anywhere so far this year because they had a couple of earnings downgrade. And one of the reasons for downgrade is because they got this new processor coming through, which is very exciting. And we all know every time they launch a new processor, they will gain market share in a big way. But because everyone knows there's a new one coming, so people are not really installing the old one.
Right.
So you had a bit of earnings downgrade, so share price hasn't gone anywhere. And in our view, this is represent fantastic buying opportunity.
And the third one?
The third one, again, it's kind of a bottom fishing a little bit, but we think it will do very well in the next 12 months, is Metcash. Now, it's gone through, it had its tough times.
So it's IGA supermarkets, hardware stores, things like that.
That's
Bit of an alternative to Coles and Woolies.
That's right. It's the poor cousin of Coles and Woolworth. You know,
right.
Coles share price hit all-time highs and the like, but Metcash has done so poorly because the independents sort of lost a bit of market share back to Coles and Woolworth because they gained so much share post-COVID, during COVID. Remember, everyone was shopping in their suburbs, and so IGA gained a lot of share. Now sort of reversing a little bit. But what we're seeing in recent result is actually things getting a bit better. And then the Total Tools, which is a hardware business, looks like it's gone as bad as it can be, and they are starting seeing green shoots. Again, it's very cheap, very defensive, very good to hold now.
Jun Bei Liu from 10Cap, we love picking your brain. Thank you so much for joining us.
Thank you for having me. I love talking about this. Thank you.